Hello and welcome to this YouTube channel for ACCA FR exam prep. My name is Adam. In this video, I will be taking you through how to adjust for tax paid under statement of cash flows. So in a given question, how do we go around calculating the tax paid? And tax paid should appear under operating cash flows, operating cash flow, or what we call cash from operating activities. The tax paid should appear under these activities. So now let's look at the details of this question to help us understand the adjustment. Now again, we have same question like we did in our earlier video on the interest paid. The same question which is on Kingdom. So we have 2012, 2013, and in this P&L, we have income tax. So this is the focus. So the P&L charge for prior year 17, current year 600. And when you go down to the liabilities, we have current liabilities. We have current tax payable. And please note that if we had deferred tax movement, we must also consider the changes in the deferred tax. So what we have here is the current tax movement, which we would only consider in this adjustment. So the same way you would adjust for the current tax payable, you have to do for the deferred tax liability. So now let's draw up the T account, very simple T account. I like it in T account because it's very straightforward to adjust. So I will call this tax payable account. So the tax payable account. Again, tax is a liability. The tax payable is a liability. So as we have it here, you'd have balance brought forward. And this is 1850. Remember, it's in thousands. Then I'll put at the bottom here the balance carry forward, and it's 500. The next thing you do is to go to the P&L account and look at the current year. So your focus should be on the current year, not the prior year. So the current year income tax expense is debit in P&L. So it will be credit in the tax payable account. So you have P&L expense, and that was giving us 600, yeah, 600. So let's put it here. Now we can close the account and find the total. Very straightforward. So we have 1850 plus 600. This should give us 2450. So again, 2450 less 500. The difference is 1950, and that should be the cash paid for interest. So under the operating cash flow, you will have this as an outflow. An outflow is cash paid. So very simple process. Look at the adjustments. Look at how you pick the items on the face of the financial information, be it the P&L or the financial position statement. Look at the accruals, balance brought forward, balance carry forward. Look at P&L current year charge and put it there. And that should be a simple adjustment. And now let me also highlight that if we had any tax on OCI item, you would have to bring OCI expense here, which is the tax on, for instance, a revaluation surplus. So if there is a tax on revaluation surplus, then the deferred tax component will come in. So it means that in the opening balance, you would have current tax, deferred tax. So please, you need to also understand how to do that adjustment. So it's a pro forma you must learn and ensure you can apply it in the exam. But in this question, we do not have OCI tax expense, so we ignore that. I hope this helps you in your preparation for the FR exam. Please subscribe to this channel to receive updates on new videos.